Could $50 in Vietnamese dong make you a millionaire? The currency revaluation theory. Stirring global curiosity. Imagine walking into a currency exchange with a $50 bill and walking out with over 1 million Vietnamese dong, VND. Sounds like just a travel tale, right? But what if holding on to those Vietnamese dong notes could one day turn that modest 50 into a life-changing windfall? This isn't some far-fetched internet rumor. It's a conversation gaining serious traction among online investor communities, financial forums, and even within select global banking circles. The concept? A potential revaluation of the Vietnamese dong that could significantly boost its value relative to major currencies like the US dollar. The theory has been quietly circulating for years, but recently it's making headlines again, as strange trading patterns, economic reforms, and institutional movements suggest something big might be underway. Let's explore this fascinating possibility and ask, is this just speculation, or is the world about to witness a major shift in global currency dynamics, with Vietnam at the center? The origin of the buzz. Where it all began. The idea started gaining renewed momentum when posts across Reddit threads, YouTube videos, and crypto-style finance groups started asking, what if the Vietnamese dong is next to rise? Suddenly, a humble currency with a long history of devaluation became the center of attention. The root of the discussion is economic. Many believe that the Vietnamese dong is currently undervalued, and that its current exchange rate, roughly 23,500 Vietnamese dong to $1 US, doesn't reflect the true strength of Vietnam's growing economy. At that rate, $50 gets you more than 1 million dong. So here's the question that ignites the spark. What if Vietnam decided to revalue its currency, to adjust the exchange rate to better reflect the nation's economic performance? A change to even 5,000 dong per US dollar would instantly multiply the value of current holdings fivefold. A shift to 1,000 or 500 per dollar could create wealth overnight for those already holding dong. Institutional clues. Not just a retail fantasy. In recent months, there have been reports of significant dong acquisitions, not by small investors, but by large, often anonymous corporate accounts and financial institutions across Asia and the Middle East. These are not typical speculative plays. Large-scale bulk purchases of Vietnamese dong from obscure yet high-volume accounts suggest insider knowledge or long-term strategic planning. In financial circles, such moves often precede major monetary changes, such as rate shifts, government reforms, or even new international agreements. At the same time, global financial infrastructure appears to be adjusting quietly. Banking systems and foreign exchange desks in Singapore, the United Arab Emirates, and Japan have reportedly updated their internal currency rate monitoring frameworks to allow for new classifications of Southeast Asian currencies. Experts argue that this may be early preparation for a reclassification of the dong's value tier. Vietnam's rapid rise, more than just theory. This wouldn't be the first time a nation shifted its currency structure after major economic growth. And Vietnam has certainly been on the rise. Over the past decade, Vietnam has emerged as a manufacturing and tech powerhouse. It's attracted billions in foreign direct investment and has become a key node in the post-pandemic global supply chain. Major electronics, garments, and machinery producers have increasingly turned to Vietnam as an alternative to China. Meanwhile, Vietnam's government has been working quietly but steadily to modernize its banking system, reduce inflation, and digitize the economy. The development of a central bank digital currency, CBDC, the so-called digital dong, suggests Vietnam is eyeing a more open, globalized financial future. Gold reserves have also been increasing, a telltale sign that the government may be bracing for a significant financial event. In the past, countries have strengthened their gold reserves ahead of currency revaluations or transitions to new monetary standards. Trade, geopolitics, and the case for a stronger Dong Vietnam isn't acting in isolation. The broader economic and political context could be fueling the momentum behind a revaluation as well. In an era where countries are increasingly seeking alternatives to the US dollar for international trade, Vietnam is aligning itself with powerful new blocs, including deeper engagement with the BRICS nations, strong trade pacts with the European Union and the United States, and regional leadership roles in ASEAN. With global powers rethinking currency settlement systems, many speculate that Vietnam could aim to establish the dong as a regional trade anchor. That would necessitate a shift. The dong would need to be stable, convertible, and more fairly valued on the global market. A revaluation could be the first step toward that future. The numbers. Why $50 could matter. Let's play out a few scenarios to understand what's at stake. At the current exchange rate, approximately 23,500 Vietnamese dong per US dollar, 50 US dollars equals roughly 1,175,000 Vietnamese dong. If the dong revalues to 5,000 Vietnamese dong per US dollar, that same amount becomes worth 235 US dollars. At 1,000 Vietnamese dong per US dollar, the value becomes 1,175 US dollars. A shift to 500 Vietnamese dong per US dollar? That's $2,350. And in the unlikely, but not impossible, case of a revaluation to 100 Vietnamese dong per US dollar, your original 50 dong purchase could suddenly be worth $11,750. Now multiply those figures for anyone holding hundreds or thousands of dollars in VND. This is why the idea is so captivating. It's a relatively low-risk bet with massive potential upside, if the revaluation happens. Growing interest, tightening controls. While retail investors are just beginning to catch on, anecdotal evidence suggests Vietnamese authorities may already be taking steps to control what's coming. Several travelers and expats report tighter controls at local money exchanges, including requests for personal identification, documentation of currency purchase reasons, and delays in dong transactions. While none of these steps confirm a revaluation, they do signal increasing government scrutiny. Such restrictions are often used to prevent speculative runs or premature capital outflows during sensitive financial transitions. Can it really happen? The realistic view. A revaluation isn't a small decision. It would affect everything from trade balances and government reserves to consumer pricing and wages. It's not something a country does overnight, but that doesn't mean it's impossible. Other nations like Kuwait and Saudi Arabia have pegged or adjusted their currencies based on economic and geopolitical strategy. For Vietnam, the move would likely require international coordination, including updates to IMF reporting systems, forex markets, and regional banking networks. The fact that financial institutions are even preparing for rate tier changes lends a surprising amount of credibility to the idea. Risk factors. The other side of the coin. As with any high-reward investment, there are risks. Here are the big ones. 1. No revaluation. Happens. The most obvious risk is that nothing changes. Vietnam may continue operating with its current monetary system for years. 2. Scams and fraud. The growing hype has already led to unregulated platforms and fake dong sellers trying to take advantage of eager buyers. 3. Regulatory restrictions. If a revaluation is announced, there may be tight limits on how much can be exchanged, where, and by whom. 4. Tax implications. In countries like the US, gains from currency speculation are considered taxable income. A surprise windfall could come with hefty obligations. 5. Liquidity issues. Not every bank or exchange will immediately honor new rates. Early movers may benefit. Latecomers might struggle to cash out. Final thoughts. Should you buy Vietnamese dong? So is now the time to buy dong and wait for the fireworks? That depends on your risk tolerance, your understanding of international finance, and your ability to separate fact from hype. On one hand, the economic indicators are compelling. Vietnam is growing rapidly, its global partnerships are expanding, and its financial infrastructure is being modernized. On the other, there's still no official confirmation of any impending revaluation. And speculation, no matter how well informed, is still speculation. For many, the dong represents a low-cost, high-reward investment opportunity. With $50, you're not risking much, but you might just be positioning yourself for something extraordinary. The next 30 to 60 days will be crucial. If the revaluation rumors are even partly accurate, early holders of dong could be part of a once-in-a-lifetime shift in global finance. Until then, keep your eyes on the signals, stay informed, and remember, fortunes are often made not by those who follow trends, but by those who spot the shift before it happens.